Hello traders at CMC Markets. This is Trevor broadcasting to you from London on the 28th of April. I'm Trevor from RG Research. We'll start by looking at major global stock indices on an absolute basis. So here we're not using the MSCI World, so we're not comparing stock markets to the average of the stock markets. We're comparing it to cash. So if they are on the right of it, then they are outperform in an uptrend compared to cash. On the left of it, a downtrend. You see that predominantly they're all on the right here, so all in uptrend, all general uptrend. Furthest on the right, we can see the Nikkei. We're going to look at that in detail in a minute. But also you can see that all the European indices, FTSE, DAX, CAC, stocks, are mostly the ones that are furthest to the right as a bunch. And we'll see that a little bit more clearly in a moment when we look at them compared to the US markets and the world. But the message is here. Stock markets are doing well, so it's a good area to be long of. The Nasdaq is outstandingly to the right, and the European indices are generally seem to be outperforming the US markets. Now this chart is a relative rotation graph of the major stock indices as before, but this time the benchmark is the MSCI World Index. So anything on the right of that is in a relative uptrend compared to it, and the left is not. So we see here we've got the Nasdaq furthest to the right again here, so both on an absolute basis and on a relative basis, with a long tail and also heading easterly as well. And so this is a good structure, and we'll look at that in a bit more detail in a moment. Here we've got the CAC, the DAX and the stock crowding together over here on the right. Poor old FTSE there, lagging behind with a small tail there. And then the other long tail is the Hang Seng coming round, had its big moment of bounce and losing momentum on that bounce now, and the Russell heading the wrong way. And here's the S&P with a very short tail, very stable and close to the crosshair. So, as you would expect of such a heavyweight component of the MSCI World, it's close to the MSCI World and correlating highly with it. But the message is really still Europe. I know they're pointed in here, so we've lost some of the power in them, but the big one is the Nasdaq, which is furthest to the right and generally pointing in a good direction. This is the S&P index. It's a weekly chart of the S&P index, and you can see that it is got a serious resistance level at 42,000, which is stifling the advances in it. We've had this pullback candle here, several tops and bottoms in there, reinforcing the significance of that line, and it's not managing to break it at the moment. We've got higher lows, so it's building a sort of ascending triangle shape, so it is quite entirely possible that it will make that break, and if it does, I would expect a very, very strong move from that. But remember, we saw the S&P to the left of the MSCI World, so here it is to the left of the MSCI World with a little bit of positive momentum in it, but looking like it's really got a problem with this 4200 level. This is the weekly chart of the Nasdaq index, which you remember is in the leading quadrant there and furthest to the right, and this is we see it here in the RRG lines here. Both of them, both the JDK RS ratio and the momentum are above the 100 level. So it's a good looking chart, and you can see that it has been well supported. We've got a little uptrend line in play here, having broken the downtrend line, and really, although we're at 13,000 now, it really looks clear right up to about 13,600, and even there the resistance is not strong. The indicators, the MACD, very positive here, gap widening on it, and on the RSI, higher lows in place here, no bearish divergence yet in it, so still looking strong and full of potential. This is not surprisingly confirmed in the sectors of the S&P. This is a relative rotation graph, weekly relative rotation graph of the GICS level 1 sectors of the S&P, and you can see there are only two that are outperforming the S&P itself on a relative basis. That is the technology sector fund, and these are the ETFs, by the way, of the sectors, and the communication services sector. In other words, what used to be called the tech sector is on the right here. Everything else is on the left, and financial services terrible, energy suffering as well, and many of these going in the wrong direction, and so looking like they're going to continue to underperform the index itself. So we've seen that stocks are generally doing well versus cash. That US and Europe is doing better. However, there is a pressure inside the US market, which is really clearly the Nasdaq, the technology area. Here we're seeing it also in the RRG graph with the two components of the technology group, both the only ones on the right. So the message could not be clearer. So let's move now to the FANGs. Now this is a chart of the FANG as a security called it's traded. It's called FANG Plus, and it's quoted on the New York Stock Exchange, a tradable instrument. Now we can see that the market broke out from this previous resistance level, 5,800. It's had a flag here. Here's the flagpole. Here's the flag. Here's the breakout of it. Then we've had another minor flag and another breakout. It's a breakout here. Often what follows is the run up that follows the breakout of a flag is the length of the flagpole added. So that was from 5,100 up to 6,200. So taking from 5,700, that would be 6,800 for the minimum price objective from this particular flag. The MACD is a rather slow indicator, so that's slow to follow. It's just ticking in towards it, so you'd need to go up more for 3 or 4 days before that kicks in. But here on the daily chart, we see from that deeply oversold position, we reverse very sharply indeed up, and it's very strong, pointing up beautifully there. So we've got a strong message here, another strong message. So let's have a look. It's not every FANG stock is doing well, as I'll show you in a second. Here are the FANG Plus stocks on a weekly relative rotation graphs versus the FANG Plus index. And you can see here nearly everything in the whole group is left of the vertical 100, therefore not in an uptrend, versus the index itself. It's being driven strongly by just two of the FANG stocks. Some of them are looking actually awful, the FANG stocks. If you look, as Julius did last week, at the chart of Tesla, it's really looking horrible, actually, and looking like it could go substantially low. And he was recommending pairs trades if you're interested in that as your short leg. We've also been following and picked early on, thanks to relative rotation graphs, Nvidia as the leader. And look how far to the right it is on there. That's the strong individual stock in the whole technology area. AMD as well, but Nvidia very strong. It's curving round a little bit here, but that's nothing to worry about. This, when a stock is so strong, you've got a little bit of slowing up will cause it to rotate around like that. So it's looking very, very good. So what we have got is this story of stocks doing well generally. The US stocks okay, European perhaps a little bit better. But when you break down the US stocks, the Nasdaq is particularly over to the right and looking great. And then when we look at the technology stocks, we can see that it is the actual old tech index that's pushing us. Then when we break down the content of that into the FANG Plus stocks, we can see it itself has got a strong leadership coming from just a couple of its components, and the other ones actually weighing on the message of outstanding strength. So let's look at we'll look at Tesla first, and then Nvidia. Now, something you hardly ever dare talk about is these enormous Head and Shoulders, but this one does look like a bit of a classic here, doesn't it, in Tesla? So in the big run up, from when we were down in the teens up to when we got to 400, then we've got left shoulder, head, complex right shoulder, two right shoulders, but this is the neckline here. We broke the neckline, we tumbled down to 100, then rallied to the neckline. This is almost textbook stuff, isn't it? We pulled back a bit, rallied a bit, and then now are just breaking down from that. It does look as though this big Head and Shoulders top is being fulfilled, and the implications of this are really that it comes back almost to where it started from. So we would measure from the neckline to the head, which I find it hard to say this, but it's 200 points. Measure 200 points from the break point. That takes you down to 15. So that would be the minimum price objective according to the calculation of the Head and Shoulders. There, I said it, but I'm not saying it's going to happen or anything like that. But we've got some natural support coming in at the big round number of 100, and also this support area here from 2020. But it's looking dire, and it was picked up very, very quickly, and it's been bad in the relative rotation graphs for several months now, back into last year. But in contrast to that, let's have a look at the Nvidia. So Nvidia, we picked up back in the low hundreds, and we liked that, and we particularly liked it again at the breakout point here, and it's surging onwards and heading towards resistance. Yes, the resistance, which is quite close now, but it's not strong in my opinion, at 290. Then the high up at 344 will be an objective for it. It's got a strong trend in play here. Here we see the RSI in place, a little tiny bearish divergence here with this slowing us up a little bit here. But the MACD is strong and looking good. A little bit of narrowing going on there, but looking extremely good and powerful, and a lot of energy on the upside. And both the RRG lines above their 100 level, and that, you remember, putting hit right over on the right. A little bit of sort of curving in the RRG chart, but that's this here. But that's a normal thing in a strongly rising market. Thank you all very much indeed for listening today. I hope you find it useful. There are some strong themes in the market to capitalize on at the moment. So I wish you a very, very good weekend.